Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I offer in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day, everyone. Ira Epstein of Linn Associates with your financial market update. And this is for Thursday, and we are now at the 16th of March, 2017, just after 3:15. So the market's now paused. It will reopen at 3:30, but this will be very close to where the market's settle for the day. Then they'll trade another 45 minutes. So you get a settlement before the last trades. Just tells you how the exchanges work this. All right. A general down day, but nothing big after a spectacular Goldilocks day yesterday where the Fed comes out, tells you they're going to do 3 interest rate hikes this year. The economy is in good shape, blah, blah, blah. The dollar falls apart on that news. Interest rate futures rallied sharply yesterday. They're giving a share of that back. The energy markets have a very mixed bag on it, but most markets that use the dollar for pricing had a bit of a bounce today. Okay. When we come to the stock market, the weekly charts, it's hard to just say anything but throw a dart, buy it, and close your eyes because that's what it's done. When trading's that easy, it's unbelievable. It doesn't often last this long, but here it is, and I don't know where it's going to end. What I can tell you is you've gone from the end of 2017 at 48.54 to a high on a closing basis that was just made yesterday, 54.19 and a quarter, and you're backing off from that a little bit right now. When we take a look at the chart action, you can see what's happening on a daily bar chart, and when I add the swing lines, you have a pattern of a higher high and a lower low. That is not a trend. A trend would have higher highs and higher lows if it's in an uptrend, or lower highs, lower lows in a downtrend. What it is, it's got bullish bias and it's maintained it all the way through as it has stayed over the 18-day average of closes. And if you use averages like I do, one of the things it teaches you is when you're over that average, you're never looking for a sell signal. So in this whole time of trading, if you were taking my charting course, not once were you looking for a sell signal. Got it? It's really that simple. And that's what I teach. You're only looking for potential buys, which obviously would have been the right thing to do because that's what the 18-day average does. It filters the swing line, and it says that when you're over the 18-day average, according to my rules, you're only looking to be a buyer. When you're under it, you're only looking to be a seller. And, of course, you're looking at this. You're looking at where Bollinger Bands come in, and the Bollinger Bands are narrowing in and holding this market back. I know you're going to say, and you should, you know, Ira, you say that, look at how it rode the Bollinger Band up, and it's still higher. All that it does, the Bollinger Band, it's telling you where resistance points are. It is also saying that only 5% of the time mathematically, you can do whatever you want. It's 5% of the time it's going to be above or below those bands, which means this is a resistance area. It does not mean the market can't go higher, but the band has to bend with it to go higher, as it did here, and then you enter what's called riding the band, but you're looking to see what your slow stochastic did at that time. When you have an embedded slow stochastic, let me explain what that means. Slow stochastics are made up of 2 lines, called a K and a D line. Let me give you the secret of the math. In the formula, one of the line uses 3 days, because this is a daily chart of time, the other 5. So the red line is the more sensitive. It's got 3 days worth of data, and it's going to whip around the 5-day line. The numbers typically bounce between 20 and 80. But every now and then they get to a pattern where both numbers go sideways over 80. With the developer of this, I explained to him, George Lane, what I thought that meant. And what I thought it meant is that the market converted itself to an all-out buy mode until that red line closes back under the 80 level, at which point it often tries to get back to a reference point, a neutral zone on the chart. In my case, I believe that's the 18-day average of closes. So what did you do? You had the correction. You lost the embedded reading. You made a run down to the 18-day average, or pretty close to it. The market's regrouped and it re-embedded. Now, if the red line gets back under 80, I will contend that prices are likely, I wish I could say they're going to, but likely to head back for a run at that 18-day average. What do we know here? We have a bullish situation. It's riding the upper Bollinger Band, and until the red line closes under 80, the bulls have control of the market. What about the S&P? Whole different world. It is a market that's really caught in just sideways momentum. It got its boost, got to the upper Bollinger Band, and it ran out of steam. Yesterday, it's running out of steam. Unlike the NASDAQ, it has higher highs and higher lows. Like the NASDAQ, it's the 18-day average that should be the support in the market. In the Dow Industrials, here too, you've got momentum that is not pointing to an upside. If you believe that momentum indexes lead price, and I do believe that, this is saying be very careful here. This is not how it looks. I realize the gains. I realize the all-time highs. But I also realize what the chart is saying, and I don't know. If you were a buyer at the 18-day average, get under 20,745, this chart would lose its uptrend. So support at the 18-day average, but momentum just not there. And the Russell's been the sixth sister. Will it catch up with the others, or does it just stop here at this 18-day average? How often am I saying this 18-day average and just sort of run out of steam? Because the markets aren't really moving that far. They go up, they come out of sideways action, and they keep churning a bit higher. But as I said with Liz Clayman last week, I was saying, it's not the same market that it was way back when. It's more or less a market that's churning to higher highs, then gives it up, comes back up, hasn't broken out of this one way or the other. In the VIX, surprise of surprises. We didn't hit the 18-day average of closes. I was just on Sky Business News in Australia, maybe 40 minutes ago. And what took place? They asked me, and they're talking about the VIX, and I said, folks, just run the 18-day average in the Bollinger Bands. You have a VIX that is sideways, but there's something major you have to understand. This is either going to be a heck of a top if it breaks down, or a heck of a base if it goes up. And when that occurs, it's going to either add another complete bullish leg to the stock market, a big one, or a break in the stock market like we haven't seen in a long time, a big one. I don't know which, because it's just staying right there. Momentum, I can't go anywhere with it. You get momentum that starts down, but you hit the Bollinger Band and you turn back up. You got to wait and see. As I said in the bonds, you don't have a trend. You have a lower low, a higher high. The bias is down because you're under the 18-day average, but you're oversold. It's really got nothing. Disappointment chart. Why? I think a lot of traders would have said, 3 interest rate hikes, we should be going up on rates. They didn't do that. They went the other way. Dollar index, for the first time in a long time. Let's take a look. You're under both the Bollinger Band and the 100-day average of closes. And as I corrected my host today on Sky Biz, who's saying the dollar's in a big bull trend, I said it is not. I said if you run your chart, if you define trend as a pattern of lower highs and lower lows, at least on the daily chart, you're in a bear trend. The market is oversold, but it's closed under the 100-day average of closes and now under the Bollinger Band. I differ. It is not in a big bull trend. The euro currency, I argued, is in a bull trend, because everybody talks the euros down. Higher lows, higher highs, over the 100-day average in the upper Bollinger Band, and admittedly overbought. Could it be that these markets are just going to expand their trading ranges a bit and pull back? It could, but the trends are there. And to my surprise, even the British pound is this strong. Now the pound got a piece of added news today, because they're now talking that maybe the monetary policy is going to change there. We had the Bank of England hold steady, but they did say that they are studying raising interest rates after the U.S. has done so, and because the pound had fallen from the 150s to the 121, inflation has been picking up. Keep your eye on this. This market might have made an important low. Japanese yen back into an uptrend. It fell as the market was anticipating the Fed raising rates. Market was comfortable with it. All of a sudden, it got the rate hike, and look what happened. It went right back into an uptrend. Strange. Then we get to the crude oil. And crude is going to need this coming week's API and EIA to prove that this was not a one-off event where we got declines in stocks and the imports don't appear as big. If all of a sudden they swell, I don't know where you go. I was talking to one well-known analyst today on the floor, and you all see him on all the major shows, Fox and Sky Biz and BNN TV like I am. We follow each other almost. And I said, I don't think the Saudis are going to extend. I think if they extend, it's at their expense for the U.S. We'll see if I'm right or wrong. But is there anything here you're bullish on? Because I don't get it. Lower highs, lower lows, embedded reading. There is no reason to be bullish this market that I see at this point. Same thing on gasoline, lower highs, lower lows. The seasonals are up at this time of the year. It has not kicked in. And that's something you always pay attention to. What are the seasonals doing? And if the chart work doesn't go with it, you don't do a thing. Look at this. Higher lows, higher highs. Nat gas, I think this area is an important low. Obviously, if we get a warm summer, the demand for it goes up. So it missed the winter demand, but it might catch the spring and the summer. So that's how you look at that. I want to remind you about consensus. I don't know if you know what this is. Look at all these contributors. This is one page. There's more. These people contribute each week, these firms, through their individual brokers, their analysts, their writers, market letters. You get to see, if let's assume you want to study sugar, all the letters on sugar. You want to see the letters on metals. You get all the letters on the metal markets. Then they take that and they create their own bullish, bearish consensus. That's why it's called that, their index. How many of the letters are bullish? How many are bearish? What does that mean to the market? These are what the letters look like, by the way, and they're all online for you to take a look at, so it's really easy. How do you get access to try this for 4 weeks? And that's what they've made available, because normally you're going to pay for this. Well, it's really simple. You call us at 866-973-2077. You can go to our website. You'll see a carousel of free offerings. Their name will be there. Just click on it, fill out the form. In fact, when you fill out our form, you'll see the offerings for other people. Just click on all that you want. We'll take it the rest of the way. You can do the same right up here. The form will appear if you're watching me on YouTube. Click right there under us on other websites. They'll have a link that opens a form. Click that, and away you go. I'd like to put this in your hands. You have a good day, and I'll see you tomorrow.